Welcome friends, welcome to freetaxeducation.com. So today we will start with the Income Tax Act, Section 10, Income from House Property, Part 2. If you remember, in a previous session, that is Part 1, we learn about features of income from house property, computation of income from house property, calculation of GAV, that is gross annual value, and we learn some important definitions in income from house property. That one is a basic information. Here also we will learn some basic information, but in a previous session, while the session I mentioned that we will learn standard deduction or arrears of rent, municipal taxes and interest on loan in brief in the next session. So in this session we will learn these four things in brief. So the first one is standard deduction at the rate of 30%. Income tax department has provided deduction at the rate of 30% from income from house property. So for what purpose they have provided this deduction? This deduction is provided for maintenance expenses, security charges, sewage charges, ground rent, common area lighting expenses. So these expenses are borne by owner of the house property. So while considering the income from house property, we must consider the expenses for that house property. Income tax department has allowed 30% flat for each and every house owner or house property owner. So the assessee, the next point is, assessee cannot take deduction above mentioned expenses separately if he claims standard deduction. That means whatever the expenses mentioned in the second point, if he want to take that expenses, then he cannot claim the standard deduction. That means assessee has to choose one option between standard deduction and the expenses incurred on the house property. He cannot claim both deductions at one time. Next one is interest on home loan, that is section 24B. This one is a very important section for salaried people and specifically individuals who are paying the hefty amount of EMIs to the housing corporations or housing finance companies. Or income tax department comes with a solution that they will allow deduction of the home loan interest from the income of the individual. So the first point is deduction under 24B for the FY, this financial year 15-16, is up to rupees 2 lakhs. That means whatever the interest you paid for home loan, which is a self-occupied home, it should not be let out home, but unless that the rent, the home is given on the house property given on rent. If the house property is given on rent, then you can claim there is no limit for the deduction. You can claim 4 lakhs also if you are paying 4 lakhs. But whatever the homes, if the interest on home loan is paid for self-occupied property, that means the owner itself himself living there. So the deduction for that purpose is only 2 lakh rupees for the FY 15-16. For FY 14-15, that one is 1,50,000, and in future it may be amended or changed also. The following conditions must be satisfied for the section 24B. That means if assessee want to claim this deduction of rupees 2 lakhs, he must be satisfied these conditions for getting this claim under section 24B. The first one is home loan must be taken after 1st April 1999. If it is taken before that, then this section is not applicable for him. the loan must be taken after 1st April 1999. The construction must be finished within 3 years from the end of financial year in which he took loan. Suppose you took loan for the home, to purchase a home or for construction of home, then you have to finish that home within 3 years from the end of financial year. That means if you took a loan on 1st October, then your 3-year limit will be start from 31st March 2016 or 2015 up to the end after, that means from the end of financial year in which he took a loan, but he has to finish within 3 years. Certificate for interest on loan should be provided by financial institutions. And fourth one is home loan must be utilized for new construction work. That means if you cannot you cannot claim this deduction for renovation. That means already you are having a home, and if you want to renovate it, then you cannot claim this exemption. But if you want to expand it, you can take this loan. If you are creating an asset extra which is not present till late, so you can claim this deduction of rupees 2 lakhs. That means these 4 conditions assessee must be satisfied for claiming this deduction of 24B. Next one is, in any other case, deduction is available up to 30,000 rupees. If the assessee is not able to satisfy these conditions, these 4 conditions, then also he can claim deduction of rupees 30,000 from his net tax total income. Next one is municipal tax or arrears of rent. So what is municipal tax? For getting deduction of municipal tax must be paid by owner of house property. If it is paid by tenant or any other person, then the deduction is not available for the assessee. If it is paid by tenant, then he will not get any deduction of municipal taxes. If assessee paid a municipal tax of previous years in the current year, then he can claim deductions for previous year payment, but he cannot claim deduction if municipal tax is paid in advance for a future period. Claim for this advance payment will be available in the respective year, in respective future years. That means first part is it must be paid by owner, and second part is if assessee has not paid any municipal tax since 2011, and if he paid in 2015, he can claim this all those previous year's taxes, and the deduction of that amount whole for since 2011 to 2015 he can claim in 2015 itself. But if he paid up to 2017 and 18, then he cannot claim, because it is for a future period. And if he want to claim that deduction, he can claim that, but in the respective year. That means if he paid advance tax for 16 and 17, then he can claim in 16 and 17 itself. He cannot claim in 2015 and 16. So I hope you understand this condition, first and second condition. The last one is arrears of rent must be added to the income in which year it received by assessee. As we discussed in a previous session and part 1 of this income from house property, the arrears of rent must be added to the income. That means whenever he received that arrears from previous years, he has to add this income he has to add his income to his individual income in the form of income from house property. So I hope you understand these deductions and exemptions provided by the income tax department. First one is standard deduction at the rate of 30%. Next one is interest on home loan, that is section 24B. Third one is municipal taxes, and fourth one is arrears of rent. So that's it from freetaxeducation.com. Thanks for visiting freetaxedu.com. That's right. Bye bye.